Welcome back, everyone, and we're here with another market review for JPY USD. And this is the Asian session, particularly for New York Eastern Standard Time. It's that 8 to 10 p.m. session. And starting here on the daily chart, the only level that I was looking for, particularly to this Thursday night trading session, was this bullish breaker that we had right here, because you have low, high, lower low, and then a higher high. And we can see price trades back up into it twice, and as well as on this Thursday that we're looking at. So for Thursday's price action, that was really all I was looking for in terms of the daily time frame. And if we drop down to the 1 hour, on this 1 hour time frame, here I have a discount rejection block here for the 1 hour. And if you take your fib tool and you take consequent encroachment of it, you draw it out. Look at how the price is respecting that all throughout the day. Look at how price is respecting that. You have wicks. Look at the body of this candle respecting. Look at the body respecting it there. So that's showing me a willingness that price wants to seek higher prices based on the respect that it's giving to this consequent encroachment of that rejection block. In addition, we see of course, the classic trend line. Retail is selling all this. So if you really think about it, what is retail doing throughout all this price action? So if you were a seller, let's say you're a retail seller, what are you doing? So you're selling here, your stop loss is there. Every time price goes lower, you're going to keep moving that stop loss. So you have it there, you're going to keep moving it there, etc., 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 until you get here. So right now, retail was probably looking, they were seeing this, they're seeing it, they're following it, and their stop losses are probably around here or there, because they're trying to chase all this down here. But what if you utilize ICT concepts, you'll realize that this is just a basic, you already know what's going to happen. Buy stops are about to get taken throughout all this because retail is selling this. It's too smooth. So smart money is going to kill them. They're going to buy up all their sell orders and stop them out. And something as well to note is look how where we were on midnight open. We're well below that midnight open. And what do I always say? That when you're below midnight open, ideally you want to be a buyer. And when you're above it, you want to be a seller. 9 times out of 10, and you can back test this, you can look at it, you can go back in price and see how many times price went up towards that midnight open when it was below it, and if it was above it, how many times it went back to it, because it goes back to that premium and discount example ICT always gives. So it's really important that you guys have that midnight opening price on your charts. Now if we drop down to a 15-minute time frame, as we can see here, I have a 15-minute premium SIBI here that price trades up into it. And remember what I talked about, how these sellers are trailing their stops. So once it came down here, where are sellers trailing their stops? Right here. Where are they trailing it again? Right here. Where are they trailing it again? Right here. So they keep trailing their stop losses as price goes lower, giving smart money more power in terms of trying to accumulate price, especially below that midnight open. And another level I had marked was this buy side liquidity here. Look how these highs are too smooth. You know, obviously smart money is gonna, like I said before, they're gonna run all these buy stops above here. But this was the key towards signifying knowing where we were gonna be headed towards, was this buy side liquidity here. And then we also had a 15-minute order block, as you can see here. This candle engulfed this candle, you draw that out, that's a 15-minute order block. And then dropping down to our 1 minute time frame to analyze everything in complete detail. Now, one thing to also keep in mind, at 8:33, a member from the Bank of Japan was speaking, so that was also something important to note. So that's why we were a little bit choppy on this night session for Asia. But overall, everything was still there. It wasn't as clean as usually we do. I think on my previous video, or I had on JPY, that sell was very, very clean. But usually when anyone's speaking, even for example when Powell speaks for the American equity markets, you can see how it isn't as clean as it usually is. So that's something to keep in mind. So they were at 8:33, Bank of Japan had a meeting or a conference of some sort. But going into this session, if you draw out that 8 p.m. open, that's super crucial. And the highlighted area I have is from 8:30 to 9:30. I call this like the Asian silver bullet. I highly recommend you guys put that on your charts. I don't know if ICT said this or anything. Like I said, comment down below if the specifics behind this. But really you can think about it like this, where at 8 p.m. New York Eastern Standard Time, it's actually 9 a.m. in Japan, and that's when their stock market opens. So just like how ICT waits till from that 10 to 11 a.m. silver bullet, you wait for the first 30 minutes. It's the same thing with this yen session for Japanese yen. You wait for those first 30 minutes and you put down 8:30 to 9:30. That's like your 10 a.m. to 11 a.m. IC2 silver bullet model. You could think about it exactly the same way. So that's why I have that there. And then going in, we see price trading back going up, taking buy side liquidity, and we do a Judas swing here. We manipulate up and down. Now, many people might have gotten tricked to go long here. Now, you really have to think about it and be very careful to where you have equal highs up here, number one, and number two, you're taking liquidity against the direction you want. You see, if you just like how the silver bullet model works for the New York equities AM session, it's the same way for this Asian session, to where you have to think to yourself and say, do I want price taking liquidity, in against my direction? Because you want to go up, but it's taking liquidity with your direction. You don't want to see that. Ideally, you want to see price, see how it sells off, and it takes liquidity, providing you that sponsorship that you need. So it's being patient and wait. So you're buying really above that 8 p.m. open. Although you are buying below midnight open, it's obviously below, it's all the way up here. You still want to be wary that why would you buy, all the way right here? This is a breakout. That's all this is. This is just a breakout. And look at how price immediately comes back down with all this volume. Practically half the candle gets engulfed. You don't want to see that. If it was still bullish, you'd want to see it go up, but this is a manipulation leg. And in addition, we had the Bank of Japan speaking at that hour. So what does price do? We Judas swing. We come down, take people trying to buy the breakout, take people trying to sell the breakout here. And right at that 850 macro, if you draw out your 850 macro, it's pretty much starting from here. I'm going to draw it in a rectangle so you guys can see. So from here all the way to 910, that's your macro. From that 850 to 910 session. We see right away, boom, we explode. That's already a key showing that there's a lot of orders going to be behind that, and we're violating bearish PD arrays. That's another big thing. Are we violating bearish PD arrays? That's huge. But look at where it came from. We filled this fair value gap here, respecting consequent encroachment. In addition, couple that with that 15-minute bullish order block, and they bought below 8 p.m. open. So you have three factors working in your favor, in addition to not only that 15-minute retail is trying to sell that trend line, and you're also below midnight open. So this was very, very probable for you to see price seeking higher prices. Now, let's say you waited. You have an order block here. Wait for that to respect that, just to make sure. But of course, you can go long even in here, or right away, or even in this fair value gap. And I also drew out this. These are two clean highs. People are trying to sell this up here. I see that as like a draw. Price comes up. Look at these equal highs as well. Here, I'm going to zoom in for you. Look at these equal highs. It's super clean. Price comes up, makes those equal highs, comes back down. We have a small fair value gap up in here. Look at the bodies respecting that fair value gap. You also have an order block. This down close candle was engulfed by these two up close candles. Draw out the opening of that first candle. That's your order block. Price comes up, displaces. That's another confirmation. What do we have here? Mitigation block. Because this high was completely swiped through without any kind of resistance or pullback. Price comes back into it. Look at how the bodies are respecting it. It was a little wonky, but it was still there. As long as if you were to go long here, ideally your stop loss should be at least below this breakaway gap here, consequent encroachment, or you could also have it below this low, whichever one. But ideally, I'd put it below consequent encroachment of this breakaway gap. So with this being a breakaway gap, I'm going to add it here so you guys can see it. Not only were you had a mitigation block, but you also had this breakaway gap supporting this price action seeking higher prices. We see price trade up again. Remember, the main draw we had was these smooth highs up here. We see price take it. You can easily, you're done for the day. You can easily exit there or take partials. We see price create another order block here. Look at the bodies respecting that. It takes liquidity right there, a little manipulation leg. We come up. We violate bearish PD arrays. You want to see that if you're still bullish. You don't want to see price displacing lower and breaking below this. So that's great that we don't close below this low. We violate this. Look at all the damage. Come back. Once again, another bullish order block. These two candles engulf this down close candle. That's exactly what you want to see. So we respect that. Look at the consequent encroachment. If you draw I'm going to use the rectangle tool. Look at consequent encroachment of that order block being respected. That's exactly what you want to see. Equal highs. Again, we come back into this fair value gap here, tap it, and we're gone. Breakaway gap. We keep going higher till eventually we reach that, as I mentioned earlier, remember that 15-minute CIBI, that premium CIBI? Look at how we target right there. Right, it's a little bit after 10, which is fine, but we target that right there and you're done. Of course, like I said, once we reach this this main draw that we had, you could be done right there at the end of this 8:30 to 9:30 session. But of course, if you wanted to continue that run up, you'd be fine. And in terms of DXY, if we look at the dollar index, for going into this session here, we could see that overall we are above midnight open. That's the key. Remember, utilizing that midnight open with the divergence of dollar and JPY is going to provide you a really good framework to the trade setups that you're going to be taking. So what happens here? Price trades lower. We sort of consolidate. We run buy stops. That's what you want to see, because if you want to see price go lower, ideally you want to see buy stops get taken, which they do. Price comes down, a little bit of a wick rejection, so it's still a little bit impatient. We come up, we're making lower highs. Notice price is beginning to respect bearish PD arrays. We displace lower. That's what you want to see. Look at the volume, look at the closes. We come up into this inefficiency here. Look at the respect, come back lower. Look at the close below the low. We come into this small volume imbalance and we finally finish by closing lower again. Now, overall, the day wasn't super clean like we had on Tuesday. If you look at my Tuesday video of JPY during that session, it was much cleaner for the sell. This buy wasn't really super clean, but it was still, everything was still there. Now, keep in mind, as I stated earlier, at 8:33, we had the Bank of Japan member talking. So that was also another big factor. But if you really stick to your rules and you really, looked at price focused, you see that everything was there for in your favor to go and seek higher prices overall. So I really appreciate you guys watching this video. Feel free to comment down below if you have any questions. I really appreciate your time. And until the next video, I'll see you guys. Peace.